This week was one the history books will likely talk about for a very long time. This was a week the ground beneath Wall Street didn't just shift, it shook. If you looked into your portfolio on Thursday, or if you watched the massive, unprecedented volume flooding into the NASDAQ on Friday morning, you might have felt like you were standing in the middle of a lightning storm. We saw the major indices staging a furious late-week rally, and we watched the precious metals pit experience a little bit of a surge, followed by a classic volatile tug-of-war. We're going to get into the exact numbers behind this wild week and what it means for your hard-earned dollars in just a moment. But first, we have to pull back the curtain because the markets were reacting to two of the biggest monumental tectonic shifts we have seen in some time. According to global market reports from Reuters and Bloomberg, the primary anchor dragging the investor anxiety early in the week was the heavy, suffocating fear premium in the Middle East. We all know this. The Strait of Hormuz blockade had energy costs locked in a vice grip. But then came Thursday. In a decisive public announcement, the United States revealed that a final, agreed-upon framework for peace settlement with Iran was on the horizon, with the potential signing slated for as early as this weekend in Europe. According to CBS News, military planners are already drawing up contingencies to secure nuclear materials, and the shipping lanes are anticipated to reopen the moment the ink dries. The reaction on Wall Street was instantaneous. Crude oil prices took a sharp dive, giving a stock market weary of inflation a massive breath of fresh air. According to Saxo Bank, the VIX volatility index plummeted over 12%, and the S&P 500 and the Dow staged a massive relief rally, clawing back territory as investors aggressively pivoted to a risk-on mindset. But as historic as a potential Middle East peace treaty is, it wasn't the only thunderclap on Wall Street. On Friday, just yesterday, June 12, 2026, history was made on the NASDAQ. Elon Musk's SpaceX went public under the ticker symbol SPCX. According to Zacks Investment Research, it was the largest initial public offering, that's what IPO stands for, the world has ever witnessed. SpaceX shattered records, selling 555 million shares at $135 apiece, raising a staggering $75 billion and valuing the company at $1.77 trillion right out the gate. By the closing bell on day one yesterday, the stock had rocketed nearly 20%, closing above $161 a share and pushing the company's market cap past $2 trillion. According to the financial press, the historic debut officially minted Musk as the world's very first trillionaire. It didn't just carry the tech sector, it triggered a massive valuation re-rating for the entire space and defense ecosystem. And if that wasn't enough global energy, the world is quietly bracing for the economic avalanche of the FIFA World Cup, which kicked off this week across North America. It's the biggest sporting event there is. It even dwarfs the Olympics. Upwards of 6 million tourists are beginning to descend upon host cities, unleashing a wave of consumer spending on hospitality, travel, and infrastructure that analysts say will ripple through the corporate earnings for the next 6 weeks. But what about the quiet money? What about gold and silver? According to COMEX data, precious metals had a stagnant ride. On Thursday, the Middle East headlines broke. Gold held in line with where it has been for the most part. Very odd time for metals, but with the dollar growing in strength, I guess that kind of checks out, and we'll look at a chart that verifies that in a moment. What can we infer from all of this? According to market strategists, we are all watching a massive dual reality. Wall Street is celebrating the hope of geopolitical stability and chasing the literal stars with SpaceX listings. But the underlying producer price index numbers dropped earlier this week, showing that producer inflation is still sticky at 6.5% annually. Central banks aren't stopping their buying, and long-term structural reality of fiat currency delusion means that even on days when paper assets throw a party, the floor beneath gold and silver remains rock solid. Decoding a historic week like this, where peace treaties, rocket ships, and soccer tournaments collide with global monetary policy, takes an enormous amount of research every single day. If you find value in cutting through the noise and getting to the real story, there are a few excellent ways you can support this YouTube channel. You can help us completely free of charge by simply engaging with this video. Make sure you hit that like button. Leave a comment below with your thoughts on the SpaceX debut and share this video with maybe a fellow friend or investor. The algorithm relies heavily on your feedback to spread the word. If this week's volatility has you looking to add physical gold, silver, platinum, palladium, copper to your personal holdings, please consider using our official APMEX affiliate link located down in the description box below or this QR code. It costs you absolutely nothing extra, but it directly helps keep this channel independent. And finally, if you want to pull up a permanent seat at our table, click that join button to become an official channel member for some perks. The headlines write the script, but the data holds the truth. Keep your assets real, stay grounded, and we'll keep tracking the rest of the story together. But for now, let's dive into this exchange. Let's see the charts. You're going to see a huge increase on Friday here in each of these markets. That's right there. That would be the SpaceX IPO as well as the Middle East conversation. Dow ended the week 51202. That's up 353 points or 0.70%. All-time high was on the 4th of this month. We sit here at the 13th, so you can see it right there as the high. We'll probably be getting back to it next week. That's my guess. S&P 500 being 7431, up 37 points or 0.5%. As you can see, all-time high once again right there, and it's making its way back. NASDAQ Composite 25888, up 79 points right here, 0.31. And their all-time high being right there. The 2nd of June being their last all-time high. This is the biggest growth of the three indexes that has to climb to get to that all-time high. But this is what's interesting. We know the Strait of Hormuz news is important, but look at all of these markets. Isn't that crazy? I have to assume that that has to do more with energy than it does with SpaceX, but every single market but one is up all the way through the Europe zone right here. We do have a pretty strong showing up here as well with Canada, Mexico, Chile, all of those. And in the Asia Pacific, everyone is up as well. So the whole world seems to be in a good place. And we talked about gold and silver kind of holding stagnant given all of this information. Here's what I contribute to be why. I am not an expert or financial advisor, but I do have eyeballs. And what I see is the dollar index actually right now is above the euro when it comes to major U.S. trading partners. So the Forex is telling us that that's something that we might want to pay attention to, because the dollar being stronger usually means banks are not quite as keen in just piling on as much metals as possible. And as we know, they probably buy a lot more metals from an investor standpoint than individuals do across our nation. So let's get to our charts and show you firsthand the movements of gold and silver this week. We'll start off with silver, of course. It ended the week at $68.53, so it clawed back just a little bit. It dropped on the 10th of June and came right back on the 12th. That being said, that's 44 cents on the week. Year to date, we are down a little bit, and if you remember, we started this year at the low 70s, and we're at $68, so that kind of checks out. About 5% down on the year as of right now. Now we go to gold. It's a little bit different story. 4227 is where we ended the week. That's down 2.48%. Gold started the week at 4,334. So that's where it stands. And on the year, it's basically the same spot, 2.47% down on the year. So that is what I have for you today. Thank you so much for watching. And as always, please remember to stay classy and current with the culture of currency.